The market is very much like a minefield. One day all is going well and the next day some country shoots down some balloons in the sky and the sentiment is all different. On another day markets are doing well and one inflation report later and the market has jitters about whether the Federal Reserve will be pausing rate hikes later than expected or if they will continue to be aggressive. Sentiment is fickle and clouds outlook. As such, sometimes people yearn for something simple, uncomplicated, and perhaps possibly predictable, much like when times are troubled and people become more religious as they seek some kind of constant in their daily lives. In the market, there are some who do crave such stability, predictability, and lack of volatility. Is there a counter that might provide such solace? Oddly, solace can be found in somewhat seemingly corporate name misnomers, for example Hotel Grand. Let us take a look at this company. This is Channel News Stock. In 90 seconds. With China's reopening come students and tourists, and perhaps while Hotel Grand is not exactly high on the list of desirable or Instagrammable accommodation wish list of must-stay hotels, they offer decent and affordable mid-range accommodation for the budget and business traveler in fairly well-located addresses. With the return of the Chinese tourists and students, it is possible that Hotel Grand might see a pickup in revenue and earnings. If so, the EV to EBITDA ratio should drop quite drastically. Possible privatization play. Management is getting on in years. They might find it tedious to going back to physical AGMs and facing shareholders who can at times be cranky and eccentric. It might not cost them all too much to take it private if they really wanted to, especially given the steep discount to book value. Company is cash rich and low on debt, and with rising interest rates, the interest income earned should pick up for the group. On the flip side, with the SGD running high against the Australian and New Zealand dollar, it is probable the company might incur some foreign exchange losses. Its total assets at year-end amounted to $1.50 billion and net gearing ratio was effectively nil as at year-end. It would also play into the broader trend of companies delisting from the local exchange over the years. When their stock is low in liquidity, there is no need for fundraising and the costs of maintaining a listing rises. Not a counter to hoard large quantities, but interesting enough to have some in one's portfolio, much like Haw Par Villa and Delphi, to sit back and collecting dividend. This has been Channel News Stock in 90 seconds.